to our partners. And the partners have been around for a while. It's supporting this sector right from the start. And PayFast and Zero, Workshop17 really are the bedrock of our partnerships. Ex-Nilo, Whipping the Cat, Baxberg, Fruit, Goodleaf, Salian Creed, Global Citizen, the tech team, Paul over there, who's making everything magical, Massimo and their crew, Justin and his colleague Neil, just making sure that the videos that come out of this, these are the partners that really make this thing happen. And just a huge thank you to you guys for all the work that's been done behind the scenes. Can we get a huge round of applause for our two guests, Hope and Keitu, tonight? Okay, over to you, Zinhle.
Thank you, Fred. First of all, welcome. Can I just get by a show of hands, who's joining us for the first time this evening? Wow. Welcome, and thank you for joining us. Thank you for taking the time to be with us. We are a community of 43,000 entrepreneurs across the country. So you definitely want to sign up to our newsletter to find out what's been happening. You want to check out our platform online. We've got an amazing learning platform. And I'm going to just do a quick PR there. The reason why you want to sign up to our learning platform is that we are the only people that collect recipes from our heavy chefs. You can actually even watch Hope and Keitu's recipes from entrepreneurs who've walked the walk, who've talked the talk, or people that facilitate the help that entrepreneurs need. So you're not getting this in a theoretical form, you're getting it from people who've actually been through the process. So after tonight, I hope you guys will engage with our platform and let us know what you think about the entrepreneurs that are there. Which brings me to tonight, right? This is our third event in Johannesburg. I am super excited. We started the year with understanding the trends that have been happening around the world. We then moved on to understanding how do you partner with corporates, and today we're fundamentally asking the question, how do you find capital? I think we've all been worried with everything that's been happening. Silicon Valley Bank went bankrupt, or it went moot. And there's just been a lot of worry whether there is capital for South African entrepreneurs. And this is why we've invited Keitu and Hope to distill all our worries. Just to kind of give you guys an idea of how tonight's going to play out, I want this to be an interactive session. I'm going to lead and start the questions with Hope and Keitu, but ultimately, this is an opportunity for you guys to engage with your real, live, practical questions of what you're struggling with in your businesses. Or if you are at ideation phase, this is also an opportunity for you to lock in the knowledge. So Hope and Keitu, thank you so much for joining us. I'm going to just start with you, Keitu. If you can give us an idea of what is I'm an entrepreneur, like what are you guys all about? What is the role that you are playing in facilitating small businesses to thrive in this country?
Thank you so much. For the people that don't know the business, so I'm the managing director of a company called I'm an Entrepreneur. I know I'm an entrepreneur, but it's the company name. So we are specialists in enterprise and supplier development. And what that means is our ethos is onefold. So we help entrepreneurs to build and grow their businesses. We typically work with entrepreneurs that are defined as SMME in the South African codes, which means you are probably making less than 50 million rand per annum if you are working with us. And we really just impart knowledge, we impart tools, resources, and skills to help entrepreneurs to grow and scale up. And obviously funding being one of the resources that are required to grow at a certain point in your entrepreneurial journey. And we take on funding projects and we partner with certain funders to make sure that entrepreneurs have access to funding resources, even those guys that would typically not be considered by a commercial funder. We would then support you throughout the journey to make sure that you are capacitated enough for your business to be able to get funding. So I first want to say we don't build fundable business plans, we build solid businesses that become fundable.
That's a mic drop right there. And Hope, moving on to you, can you tell us about Founders Factory Africa? What is the role that you guys are playing in facilitating the process for entrepreneurs to get access to capital. And also, if you can shed light on what your strategic positioning is in the African continent when it comes to obtaining capital.
Sure, thank you. So hi everyone, my name is Hope. I come from a VC firm called Founders Factory Africa. We are HQ'd here in Johannesburg, but we have 4 offices across both Africa and in Europe as well. We have 140 million US dollar assets under management, and essentially we've invested in 60 startups to date. How we are strategically positioned is we believe that we are meant to be partners to founders, so we are consistently reinventing the wheel around what does it take to really help an individual entrepreneur move from idea to sort of exit. There's 2 things that we do in this area. The first one is we provide catalytic funding, so a blend of both equity and low interest loans. We initially went to market with equity, but we noticed that a lot of entrepreneurs need to kind of experiment on working capital or embedding finance into sort of the solutions that they have. So we've then since launched an interest-free loan, which will obviously be a way to kind of finance your business without giving away too much ownership. And that goes up to 4 million rands. Always have to do the conversions in South Africa. And then the second piece, which I think is more important for us, is because we've invested in so many different companies, we do genuinely believe that money is commoditized. So it's not just the only thing that can enable scale for startups. You do need hands-on support. We don't believe in mentorship and coaching. Super, super hands-on. So we have about 40 people who work in our venture studio model. They have expertise around growth, product development, engineering, etc. And essentially what we do is we align with you on what your North Star is, what does it take to, depending on your stage, to get to the next phase of your business. And then we provide that hands-on support through sprints, working with you to either launch a product, grow your product, broker different corporate relationships, and ultimately unlock follow-on capital. So the combination of these 2 is what we believe entrepreneurs all over the world, but our primary focus in Africa need in order to obviously build sustainable, scalable businesses.
Wow. And if I can just hop on that, Hope, if you could advise our community, I think most of them are torn between going for the equity funding versus going for the loan option. When is it applicable to rather go for loan versus the equity, debt equity funding model for entrepreneurs? Like, when do you advise an entrepreneur to sway one way versus the other?
Yeah, I think it's very business model dependent. So maybe a big caveat, so we only focus on tech startups. But I think just given the way like the African ecosystem is super fragmented, there's a couple of different challenges, especially infrastructure challenges that equity is not geared to support, right? So for us, that's why it's more catalytic to say there are certain challenges, if it's like getting working capital. Equity is not the right platform to do that. If it's starting to kind of bootstrap or kickstart one side of the marketplace, if you have a demand and a supply, and it's like, how do you actually get sort of upfront capital in order to kind of finance one side of that marketplace? Equity, again, is a very expensive form to pursue in terms of financing that. So I think we believe like both is the solution. Across our 60 portfolio businesses, close to 90% have needed debt in some instance. And it is always super difficult to try to broker these relationships with the big banks. So it's like, how do you provide that little liquidity that allows them to experiment, prove it out, then they can go out externally for that bigger debt funding. So yeah. So that's within the tech context. Yeah. I think it'll be very, very different for SMEs. But again, it just depends on your business model. It depends on the specific constraints that you have. But then also weighing up your options between paying interest versus giving away equity, which also are very different, big decisions to make as an entrepreneur.
Absolutely. And Keitu, just rolling back to you, what programs can, if somebody is interested, do you guys practically have for entrepreneurs to be supported if they are currently looking to raise, let's say they may be still in ideation phase, or if they are still in the early stages? If I come to you as a prospective client, how do you guys assist me through your programs?
We always start our programs with a gap analysis. So any entrepreneur that's gone through our doors, someone within the organization has visited their business. If you're working from home, we meet either at your home or at the restaurant. So it's important for us to understand what stage of business you're in and where your mind is at, so that we can then unpack further what is required and how we need to help you and where are the gaps. And we typically use, especially for startups, we use business model canvas. And as an entrepreneur, you guys would probably know the business model canvas. If not, a great tool to use to assess your own business and the type of resources that you have internally. So we use that particular model to understand where your resource gap is, understand where your skill and your activity gap is, so that we can then plug in. Because then what we normally do, especially from a funding perspective, funding comes from a particular gap that you have within your business. So if we don't understand your business comprehensively, we're not going to be able to identify the gap and where the funding or whatever resource required needs to go within that particular business that you have. So coming in as an entrepreneur, we would first take you through that business model canvas where we understand your business, and then we're able to go through next steps and then have certain goals or certain tasks that needs to be done for you to achieve that North Star that Hope was speaking about.
And Kitu, when you're usually going through this business model canvas with the entrepreneurs, what are the common hurdles that you're finding that entrepreneurs are struggling with, that you can share with our members in terms of how to prepare and make sure that like your business plan is solid?
One of the biggest challenges entrepreneurs struggle with within the business model itself is costing. Because what happens with costing is that we're all trying to get foot into the door, right? So you end up costing so low that your margins become too low for you to get to run a sustainable business. Because after if you know the income statement, so you have your sales, you have your cost of sales, then you have your gross profit. If that gross profit is low, you're not going to be able to procure the rest of the expenses that are required on a day-to-day business. So we're seeing a lot of entrepreneurs struggle with that. So that's the first thing that they struggle with. And then the second thing they struggle with is the cash flow management. And often where there is no cash, it's hard, right? It's hard to manage. So we're seeing a lot of, I should have worn my Cash is King t-shirt today, actually. But next time. So we see a lot of entrepreneurs struggle with cash flow management and financial management. And you know, I love sayings. So I teach at UJ, right? So I always love to tell my students sayings. So in this particular topic, I like to say, you know, they say your revenue is your vanity. Because you get 5 million revenue or whatever, 50 million revenue, your contract is worth 50 million rand, your revenue is 50 million rand, vanity. You get your profit, you get profits of 5 million or whatever it is from the 50 million rand, sanity. But your reality is your cash. And the cash is what the entrepreneurs are struggling with. So that's where the challenges are really coming in.
And coming back to Hope and tying that in, Hope, we were having a debate earlier where I was asking you, you know, we often glamorize this idea of raising capital, and that's not always necessarily true for every entrepreneur. Sometimes you actually need to take time to, better your product or your service offering. So for the different, Hope, if you can talk me through for the different phases, when is the right time to raise capital versus actually focusing on your product offering or your service offering? Do we always necessarily need to raise capital to grow as a business?
So no, but with the caveat is I do think you need to always think about building relationships with investors quite early. So I think what I was sharing is that the biggest mistake that entrepreneurs typically do is they'll network with investors, then say, hey, I need to go back to build my business, and then now when you need money again, you're trying to catch up on sort of that networking and relationship and authenticity that's built over time. But in terms of raising, it's also a vanity metric in the context of VC, and it's really important to know, like, what are you raising for? And I would split it into the different phases, right? So if you're still at idea stage, the big thing that you're selling to investors is, hey, I've got specific expertise, I've got a deep connection to this problem, I've got a unique insight into how this problem could be solved, and you're also painting a vision around how big the commercial scale of this could potentially become, but you have nothing, right? So I think what you're selling at that stage is the composition of the team, the skill sets, and how you're proving that this is the team to execute against that problem. So that's sort of pre-seed, that money's it's aimed to help you to get something in the market, right? So that you can start getting some early data around consumer insights. Now when you get to seed, the main thing should be, okay, now we have some insights about what's working, what's not. We're doubling down on a specific product. And now it's about how do you get product market fit. For us at FFA, we're very explicit around product market fit. There's 3 indicators. Number 1, are people actively using your product? Number 2, are people actually coming back? Like, it doesn't matter if people are using it and then they're dropping off. So you're starting to work towards what experimentation can you run so that you can drive retention. Then number 3, have you figured out the right channels to keep acquiring new customers? When you have the combination of acquiring new customers, making them use your product actively, and then keeping them, that's product market fit. Then as you then move on, you obviously then want to scale to new markets, to new geographies, maybe expand your products to increase your margins, then that's when you get to the Series A. So I think it should always be raising with a purpose and in order to accomplish specific milestones, and not raising for the sake of, but not deprioritizing engaging with investors, keeping them regularly updated on what are you learning, what are the pivots, what are the challenges, and that also helps with that two-way due diligence, so that when somebody does come on your cap table, they've given you much more value even beyond sort of, you know, actually taking up equity or actually putting in money. So that's why I'm like, always build the relationships, but raise with the purpose and know what the goal for that round would be.
Yeah. And Keitu, do you agree with Hope's sentiment? Do you have anything you'd like to add to Hope, what Hope just said?
I definitely agree with what Hope said, but we obviously I'm an entrepreneur side, we deal a lot with debt funding. And debt funding is a little bit different because at the time you're now looking for this debt funding, the funder wants to know, are you going to be able to pay me back my money consistently every month? Yeah. So at that time, you can't go with an idea. You have to go with a product, and you have to go with a market or some sort of market. As she had said, I think it's her Series A. At the time, you've proved your market, you've had some sort of traction with your product, and when you're using business model canvas, you know your product or service, you know your customer channels, you know what relationships you need to give your customers to be able to keep them. So that's the point where you most likely you become successful for the debt funding. And even in that instance, the cash flow becomes quite important, because when you're doing then projections, the debt funder wants to know from you, once again, are you going to be able to consistently, every month, pay me back this installment? And how are we going to make sure that every month we are making enough sales to be able to pay back the contractual amount? So in that instance, we would then, at our point that you're coming to us, make sure that you are ready and you have enough market, or you have enough access to market to be able to have enough revenues, and beyond your revenues, have enough cash flows to be able to pay back.
Thanks, ladies, for your insights. My name is Danae, co-founded a company called Fundamentals, or Finter is the product we're focusing on, and we're trying to build positive money mindsets and behaviors in kids and families. So my question is, obviously with funding comes responsibility, and I wanted to ask you ladies is, how can we be the best stewards of the money that is granted to us?
Good governance. So I think when you do from very early on set up the right accountability mechanisms, right, I think it inherently enables you guys to be good stewards of that money. So who are you accountable to? Who do you guys outside of the co-founders report to, right, in terms of where the money is being spent, what is the ROI on that money, what are you hoping to achieve, and what will more money continue to unlock? I think the second level is leveraging sort of, or being data driven, and I think naturally then you'll be able to think about what are the right tools so that you're not manually tracking things, because I think that's when inconsistencies can come up. So just really having a data-driven mindset to say, how can you put up the right processes that allows us to kind of track things from day one? I think sometimes the mistake that entrepreneurs make, it's like, okay, well, institute this maybe like a year later, we're still too early, but those behaviors kind of become company culture, right? So I think from day one, just thinking about the right tools to be able to track where money's going, using it internally for your own decisioning process as well, then it becomes easier to then report it outwards. So I think those are the two that come top of mind in terms of being the right stewards or the best stewards.
And examples of who we can report to, is that advisors,
Yeah,
or just someone
yeah.
with more experience?
So I think so obviously it depends, like, so pre-seed to seed, just setting up your own advisory board. I think it's good practice. It gets you into the habit of reporting to a board once you get to much more of the later stages. And really just sending monthly updates in a standardized format, quarterly, bringing them together to say, hey, these are the things that we achieved. This is what we're looking to achieve. It also gets your advisory network to work for you, because then it's like, hey, like, we're struggling with this. We need an introduction to a big bank. Do you have anybody in your network? So they feel so much more like intimately involved in the success of your business, to the point where when it comes to fundraising, they'll also have a vested interest in making sure that you guys continue on. So a mixture of advisory, which are people with expertise within your realm, but then also any early investors, right? Angels. I think sometimes I'll meet angels where they write a check, then they kind of disappear, and I think that's a good structure to get them involved as well.
Awesome. Anybody keen to share what a standard reporting to any board financials looks like?
I think going back to the point of good governance and financial management, right? You would have to report back on operations, business operations, as well as financial operations. And within your business operations, you'll obviously report back on the things that are important for your business and for the things that help you reach that North Star. And also from a financial perspective, you not only report on how your business is doing now, but before then, you would also have to do your own projections, right? You would have to do projections, budgets, whatever you want to call them, so that going into those meetings, you're also reporting on how you're tracking with that. Because that also keeps you accountable in terms of what activities are happening in your business and what are you putting your efforts into and what results are they yielding.
I think we have a question at the back. So we'll have 2 and then 3 and then 4.
Happy to share a template with you if you want.
I'm Nobuntu. I own Busabuntu Pictures. I've sat on boards for government entities before and private equities as well. And it's actually feedback on what it's like to be on the board side assessing business rather than what you deliver. It's also important, I think what the ladies at the front have said is exceptionally valuable, but never lose sight that your finances are a showcase of your vision. And so if you're not achieving your mandate as a business, so if your mandate, like you've said, is to ensure kids become financially savvy, your finances indicate that. So if you are not succeeding in achieving that goal, we're going to see it in your money. And it's interlinked, and there can be a lot of highbrow in a lot of our conversations in setting up business, but ultimately at the end of the day, it's simple. You have a mandate, you created a business to achieve a goal. If you're purpose-driven as a person, as a team, that purpose will show in your finances. And the environment that you're in might also be challenging your finances, showcasing your success. So it's also important to note that. I think that you've got 2 people on stage who work in very different environments, and it's important to note what they're saying, because tech is on the rise. Tech is offering a lot of solutions quite easily. So don't feel disheartened when you're hearing tech success and you're not a tech business. And then you're hearing somebody who's talking about training and scaling up and empowering yourself. That is important in tech as well, because if you don't have the skills of sustainability, of self-empowerment, of purpose-driven work, no board, no advisory board, no public entity or private entity is going to look at you and not expect for your purpose to come through in your finances. So I think for anybody who's in a startup or has moved beyond seed, ideation, know that as boards, we look to see that your operations, your human resources, your capacity to operate is actually just, it's a part of the finances. They are not the king. Yes, cash is king under the mattress, especially when you've got load shedding and you can't operate the electronics. And then cash is really king because you're making it rain with real paper money. But in the context of what really makes business work, I have found in my experience, whether it's from a startup perspective or a public sector perspective, purpose is king. And if your purpose is not showcasing in your work, reassess. Reassess what solution you're offering, what purpose you're offering.
Thank you so much for that comment. And that's really great. I'm glad you put up your hand to comment. This is what our events are all about. It's not in all events that you actually pull in a different pool of people and you can actually leverage off information. So thank you so much for sharing. Mo, we had 2 questions at the back.
Hi, my name is Mujikwe, and I am a writer and content consultant in mostly the creative industry, specifically fashion. I write a newsletter called African Fashion Weekly, so I hope that was a sufficient intro.
Where do we find it?
AfricanFashionWeekly.com. Thanks. I had a question for Keitumetse. I love your new LinkedIn newsletter, by the way. I'm just thinking about, from your perspective, the entrepreneur's perspective, when you talk about raising money and you talk about doing it or trying to do it first within your business, starting with the customers and starting with selling. If you say have a new income stream, if you identify a new customer need and you discover a new income stream through that, but it will require you to split focus, split resources to create a new product or a new feature, then what would you say is a good way to go about that without losing momentum financially on what your core project or your core income stream originally was?
Very good question. And I think with that, and when you found a new income stream, right, it's a new baby. And I often tell my students this is a new business model canvas for you. So if you have 2 income streams, 2 businesses, it's 2 different business model canvases. And in both of them, you're going to evaluate internally, what resources do I have? What activities do my 2 businesses require from me? What energy do I need to put in both of them to make sure that I reach my North Star for both? And obviously one is bound to take a lot of the resource, generally the newer one, because then it hasn't had that momentum where things are growing organically as in your first business. So you would have to put hours in your second business, but I mean, as an entrepreneur, what is sleep? You would have to sacrifice some hours in your new business to make sure that you have capacitated it enough to ensure that you can roll out whatever tasks or goals you wanted to roll out in your second business. So don't let your first business deter you from starting an income stream that you've identified.
Yeah, but can I just add to that? I think to her point, like why you would need to treat it almost like a separate business, it's kind of like seeing would it detract you from your North Star or further accelerate from your North Star, right? Because sometimes, and I think for me, sorry, I think there would be like maybe 2 key things, like outside of thinking about the resources. Like number one, what is still the existing market potential of that first income stream, and how much have you actually really tapped into that, right? And like expanding resources to kind of advance to gain more market share within that first stream, like comparing that ROI against sort of starting to expand and looking, you know what I mean? So I think there's that layer. Then the second layer is like also from a unit economics perspective, like do they both have the same return from a gross margin perspective? And I think sometimes that's the oversight that founders might have to say, oh, because now I can make money, because maybe there's somebody who's come in and say, you could kind of do this, like your core proposition is not something I'm interested in, why don't you do this? And then sometimes they kind of start expanding their capacity, but then it's not yielding the same ROI in terms of where they could have been if they just focused on the first. So I think really, really just stress testing your thinking around, okay, what would be the ROI if I did do that? What would be the potential if I stuck to what I'm doing, but then aggressively went for bigger market share, right? So definitely treat it as 2 different businesses and starting from scratch, and then seeing is it still worth your time to introduce that income stream at that specific point in time, especially at an early stage. Because in my experience, it can be really, really distracting for founders.
I think we had another, yeah.
Good evening. My name is Lutando Kolwapi. So I am trying to enter into the filling station business, specifically focusing within township economies. So within that and trying to enter the space, you find that you have to be always proving yourself within funders, because I think there's just so little known with regards to the spending power, or it's often underestimated how much can come from that. So you find yourself having to prove 5 times more than if this filling station or business was in more the suburban side. So how do you overcome this sense of, you know, township economies being underestimated when it comes to spending and having potential businesses within them? Thank you.
I think in instances like that, I have found what works is to work with a company or a corporate that deals with filling stations. So I currently I do some work with Sasol. Sasol has the know-how. They already know the market segment. They know the margins that can go through. So rather get involved in that Sasol enterprise and supply development. One, they'll fund you if it's a viable business, and they know the challenges that go in starting a business. So trying to go to a funder that doesn't understand that market is difficult for them because they're also trying to learn it. So in instances like that, rather partner with the direct source, partner with the Sasol. Sasol has an ESD fund. They fund guys that want to start filling stations wherever it is in the country. For them, if it's viable, it's going to work, it's got market, they will help you through the process. Okay.
But it's an important question, and I want to almost redirect a little bit, spinning off your question, that we do a lot of research in the township economy as well, in terms of understanding the landscape and so on. So it might be worthwhile for you to also read one of our reports to just understand what the South African township economy is like. We call them disconnected communities, but yeah.
Good evening, ladies. Thank you, Kitu. Thank you, Hope. Lovely experience that you expressed, and thank you, Zinhle, as well. My name is Richard Cunliffe. I'm employed. I work in the financial services industry. My question is more of a research question. If we talk about challenges to backability, ideally as an entrepreneur, we want to come with an idea that's exciting, not just aesthetically, but also, you know, something that investors are going to want. Now, from your experience, you know, from the landscape of South Africa and obviously globally, you know, whatever you deal with, what have you found are the biggest challenges or maybe development areas us as entrepreneurs in South Africa have to being seen as backable?
So I would say it's 2. I think the first one, it's really having a deep connection to the problem. I think sometimes we'd find somebody who's never worked in an industry just like wanting to solve a solution in that industry, right? And it becomes a harder sell on why would you then spend the next 10 years like of blood, sweat, tears, frustration, sleepless nights, like working in this industry, unless if you've seen firsthand what the challenges are, you've collected data points around what are the unique insights. So I think the biggest issue, especially at that idea stage, is when founders can't properly articulate like why this business, why am I the right person to actually solve something in this business. And there's a combination of different data points that different investors use, right? For us, like we break it down to say, okay, number one, if you don't come from that specific industry set, can you speak practically in terms of some of the insights that you've gathered that whatever consumer base you want to address, what are they experiencing, right? So not from like research, but practically spending time on ground with them. And have you then also identified what your personal gaps are and then brought on people that could complement you in terms of solving this problem holistically? Secondly, have you proven the ability to take something from 0 to 100 in any context? Whether you worked in corporate and it was a new division and you were like, hey, actually, I spearheaded this one new initiative, now it's grown in revenue. So could you really take something that is nothing and make it into something? And I think having specific case studies of when you've done that might not have been when you were an entrepreneur, because obviously we're not all second-time founders, right? But really reflecting deeply on how have I shown the ability to execute at scale in whatever context I exist in. And then the last part of it is just showing that you do have a very data-driven mindset. I can't stress this enough. Like sometimes when founders apply with an idea, they are so stuck on the solution. But most businesses, and I'm sure when you guys speak to your fellow entrepreneurs, like they thought they were onto something and then they got data that contradicts what they thought they were onto, and then they kind of pivot, and then the business at Series A or exit is so different to what they started with. And I think it's just that ability to follow the data, right? So even if you're speaking to a customer and you're conducting a customer interview, not trying to guide the interview in a way that they're validating what you, oh yeah, of course, like I know that's the problem, but really listening, being intentional, surfacing those insights, and then using that as data to inform decision making. So for me, I think that is like the biggest thing that we look at that idea stage. A combination of different things around like, what else have you tried something here, right? I think sometimes people will sit at night, kind of send an idea, then hope the person like responds, but it's like, have you actually gone out and created a waiting list, right? So you might not have money to actually build the product, but have you done a small little campaign to kind of prove that, hey, if there was a product, people would actually want to buy this, right? Have you spent time on ground talking to these individuals, understanding their pain points, collecting those insights into a document that you can feed to investors to say, I've already done market analysis, I know what the opportunity is. So I think it's just showing that you've started to kind of execute against that idea. So it's moved beyond just being an idea in your head, and you've started making traction towards trying to prove out what the potential could be. So I think that would be the biggest barrier, where founders can't articulate why they're the right founder, can't articulate a practical understanding of the problem, can't showcase that they've done something more than just what exists in their mind to kind of try to solve for that problem. And really just almost overcoming the psychology, because it's a very big risk you're taking, right? But can you show the investor that you've had that conversation with yourself to be like, okay, I'm about to leave a stable job, or I'm about to leave whatever, background I'm coming from, and actually step into this, and can you show that you've actually taken that leap? So I think that's something that founders could do better, to just really, really think through, why this business, why me, how have I executed before, and how can I bring all those insights when pitching for funding?
And I think just to add one more thing to that, in my world, a backable business is a business with a customer. If you don't have a customer, it's very difficult to back you. So you always have to make sure, in coming back to that whole, the purpose thing, and being passionate about what you're doing, at the end of it all, what you need is a customer to buy the product or service from you, so that we can scale on that, because it takes the first rand, right? And once you get the first rand in your business, then you can start saying, from my first rand, I now need to move on to 10 rand. Now I need more customers to move on to 100 rand. 10,000, 100,000, 1 million. And it's about that. How am I going to make sure I move from 1 rand to 10 million, or whatever your North Star is? So a backable business is a business with a customer.
Hi everyone, my name is Tular Matlaba. So I've got a 3-part question, and it goes to both of you individually, right?
It's one question though.
No, it is one question, because the first part has to be answered to legitimize my second question, the actual question.
Okay.
And Hope told us that they're expressly in tech. Kitu, what are you guys funding, or what are you willing to fund?
SMMEs.
Any SMME?
Any SMMEs.
Okay, that's important,
any
because
industry.
I'm in 2 businesses, right? I'm also employed full-time, but I've got a cap business with a best friend of mine, and I farm with my brothers, and I wanted to know where I should pose my question. And I'm glad the gentleman went before me saying he's from the financial sector, because we're struggling to get money out of the financial sector, specifically in farming, which is interesting, because we are 4 brothers, black men, farming. We've been doing it for about 6 years. We've got 2 years where we have made money, as in when everything's paid off, there's a couple million in the bank. Yet it is still proving extremely difficult to get money out of the financial sector. I can say with open cards, literally only one bank ever gets back to us. And again, we give them everything. Excel spreadsheets, you can name it. We've had the agronomists come over. We've been told beautiful stories about how, and again, I'm saying this believing I'm in a safe space, that as black farmers, we are meeting the standard. We've got records, because my eldest brother is a fanatic about Excel. Yet we're still struggling. And we are looking for alternatives. We're definitely SMME. We're not making 50 million yet. I said a couple million. But again, that money doesn't come into our pockets. I heard someone go, It doesn't come into our pockets because we've got to buy tractors, buy combine harvesters. You got to plan for the next season. You got to get workers. Our farms get raided. We lose stock. We have to hire security. It's a whole thing. What are the options for us? when we struggle with a proven track record to go to the banks, and when you speak to, or when I've tried to access other funders outside of the banks, they don't know farming. And it's a tough one being black, and I'm being deliberate about that, because in this country, you would hope that as a black farmer who's doing it the right way, that the doors would open. But jara, they're closed.
Have you tried, what farming are you guys in?
Crop, so maize, sunflower. This year the rains were terrible.
There's a big drive at Barlow World for maize farmers. They'll even give you the seed because they farm a particular maize, and they need black maize farmers.
So now here's the problem, right? I'm glad you're saying that. It is, and maybe I'm looking in the wrong places, but when you try to find the places that are open, these things are almost like hidden secrets.
Yeah,
like
you
literally
won't
you've
find
unveiled
it
a
by
secret.
Google. You won't find it. You won't.
And
you
it's
can't
frustrating.
search. You won't find it on Google.
You find it at Heavy
And you
Chef.
find it at Heavy Chef. That's why we're here, right? We're here to share knowledge. You can also try Tiger Brands. Tiger Brands has a huge drive for black farmers.
Apologies, sorry to cut in. But it's not even farming. It's across the board. I'm in tech. I know nothing about farming. And we've been in operations for over 9 years. We've got a proven solid track record and so on and so forth. But finding funding is hard as hell. Even when you show that I've got contracts running, I've got this, I've got that. Give me money so that I can continue. It's still non-existent. Can't access it.
You found hope at Heavy Chef.
It's a start. It is
It's a
definitely
start, and you need to email her your documents because she's here. That's why we come to these events. She's a tech funder. She's here. So your job tonight is to get her email so that you can email her everything. And she'll tell us where the gaps are. If there are any, if the other funders haven't told you. But on the real though, I think it's really coming to events like these and speaking to people that can tell you and give you where to access certain things, right? And that's why we are a community of entrepreneurs. So like in events like these, for your instance, Hope is the best person for you. She's here. I'll hook you up with the people for maize farming.
But just out of interest, I think on the banking side I can understand because I think financial institutions in general, no offense, just need to kind of evolve, right? Their own credit risk modeling. So I think that's an opportunity for us. So there's a lot of tech startups that are trying to come into that space and have alternative credit scoring so that you can kind of extend more funding to sort of underserved sectors. Cool.
I think we have a question from the youngest person. Is that correct? No, I'm kidding. Louis.
Thanks for the compliment. Well, first of all, at Heavy Chef, our most valuable person from a numbers and financial point of view is our business partner, who's very much a finance person. So I'd encourage everyone to surround themselves or get a business partner who is financially, knows the numbers, all of those kind of things. And he's also married to an accountant, so that helps us a lot. But who is our accountant as well. But no, my question was, I think a lot of entrepreneurs want to ask about unit economics. And if they don't want to ask, I think they should ask about unit economics, and wondering if you can explain what that is and why it's important, how you guys view it and how it can be used. I think that's a crucial term to think about.
What is that? Unit economics.
Yeah. So
Like costing.
yes, like
Okay.
but at a unit level, so that kind of multiplies to the rest
To
of
the
market.
volumes.
Yeah.
Okay. Just before I come to you, I was going to say to the gentleman at the top, also generally, commercial funders don't fund primary agri. Once you start going into agro processing, then you find a lot more funding options for your business. So primary agri it's a no-go for 98% of funders, and that's why ESD funders tap into that market. But once you start going into agro processing, then you can start tapping into a lot more funding options. even the banks themselves start even giving you an ear when you're doing agro processing. So I just wanted to say that to that gentleman. So with unit costing, accounting, ne? So you guys are taking me back to my audit days. I left audit, guys, for business advisory. So obviously and I'll start with the income statement, right? Because that's where it all starts. So you can't price before you've done your unit cost. And often what we do is we price first, because I want to beat my competitor Keitu because she's selling at 10 Rand. I'm going to sell at 9 Rand. You have to start first with your unit cost. How much is it costing me to get product value to customer? From the time, if I am selling a mic, and I'm using a mic because it's in my hand, from the time of me buying the first component that goes into putting the mic together, to the time it reaches Keitu's doors, how much is that transaction? And obviously, as I'm buying more in bulk, it becomes cheaper. But when you're starting off, you start off with your unit cost. If it's costing you 10 Rand for one mic to be delivered to one customer, then you need to cost from there. You need to start saying, what are the margins that are required out of me, my 10 Rand, to get through my business? Because remember, also in a month, you have many other expenses outside of material. And typically, exactly. So typically when you start costing, when you're starting your business, people forget that you've got bank charges. Facebook ads are also a cost. You know, moving Uber one place to another, coming to Heavy Chef event, you drove here, it's petrol, you've got fuel in your business, you're using a laptop, data every day, your Wi-Fi, you forget all of those everyday expenses. And when you are then putting your margin on your unit price, you forget to incorporate that, your business expenses into it. And that's why you have two margins on an income statement, your gross profit margin and your profit margin. Like I said before, your gross profit margin is supposed to sustain all the other business expenses that you have. So when you are doing your unit cost, you need to remember that it doesn't only take your material to get that product from your premise or wherever you were making it to get it to Keitu. There's also petrol. If you are manufacturing, there's electricity, there's water, the electricity that we have at that point. There's water, the water that you have at that point. There's all these other expenses, right? So always make sure that you put enough margin on your product to be able to sustain your business. The cost of getting your foot into the door can be very expensive for an entrepreneur. And that's where a lot of the times we fall short. You end up paying your client for using that product. So just be careful your unit cost is calculated right, that you're not donating, you're not paying your client, especially when you start working with corporates. We see that a lot. People, your contracts with corporates the margins are thin. I mean, at that point, you might as well give Coca-Cola the money to make the Coke, because you're giving them a price that really does not work to making your business successful. And I'm using Coke because I love them and they're my client. So it's not that I hate them. So I think, not to deliver on the point, just make sure that your unit cost, you start with your unit cost and then you go into putting a margin on your product.
Hi everyone, my name's Neil Kirby. I'm a photographer and an industrial designer. And you can see from the color of my beard, I've been around a while. So one thing that you guys haven't discussed when you go and ask for money is you need to be really well prepared. So I found when I turned a corner in becoming successful was when I had good systems in place. So when I moved from having an Excel spreadsheet to actually using accounting software and having accountants come in as freelancers to say, this is how you structure a business. SARS doesn't care if you pay them too much money. They only care if you don't pay them enough. So the accountant who turned my life around said, I don't do anything under the table, but me do I do work in contact with the surface molecules of this table. And that was a very, very inspiring conversation we had, because he explained that I don't have systems that I can measure stuff. If you can't measure something, you can't improve. And also, when I did need to go and ask for money, he said, have your ducks in a row. And when people ask me questions, I could say, yeah, sure. Here's my SARS clearance certificate. Here's all my books. Here's everything I've done. And at that stage, it was tiny turnover. But they could see that I was keen to succeed, that I'd done my due diligence. And I have a lot of people coming to ask me for advice. And I say, you've got no administrative system whatsoever. How do you expect anyone to believe that you can, yeah, maybe you can perform the service or build the product, but you've got nothing to back you up. So that's something that you guys haven't discussed tonight, is being prepared. And I come from a farming background, so I'm not scared of hard work, but that is mental. So I take my hat off to anyone in the agricultural thing, but farming works on very tight margins, and that also boils down to administration. So you have to know where every cent is going. And you have to be able to prove that to people who are going to give you money, because they're never going to trust you unless you can say, this is where every cent went. And you've got to prove that in your heart that you can do what you say you do on the box.
Absolutely, and it boils down to that financial management processes that we were speaking about earlier, right? And beyond the financial management processes are a lot more other processes that are required within your businesses that you need to know and be aware of. And I think also for SMMEs particularly, the sooner you start, the better. Start from day one so that things don't become a red tape for you when you are now looking for funding. Because once you start from day one, nothing becomes a red tape. If you start day one, separate your business and personal account. At the time that funders are looking for it, it's not a red tape. Be compliant from day one so that when funders are looking for it, it's not a red tape. The things become a red tape because you're not prepared, which is absolutely correct what you're saying. So going back to what he said, be prepared in everything and make sure your processes, what we call in accounting terms, internal control procedures, are in place. You don't need to be an accountant to understand your financials. Even if an accountant or an outsourced person is doing your finances for you, you as the entrepreneur need to understand the numbers. And I think that's where a lot of us fall short. We look at the balance in the bank account and then we're happy with it and we let it go.
But also with something like Zero, they can set it up for you once.
Yeah.
And check in on you every 6 months. And it doesn't
Absolutely.
you don't have to have them in your payroll.
Yeah, Neil, I was about to say, like, I think a lot of people need to start using cloud accounting services because it automates the process for you and you get the analytics so you can really understand what's going on in your business. So as people who are numbers people, that is like a perfect platform. And they're one of our partners, so I would encourage you guys to check them out. Check out Zero. We had a question, yes.
My name is Setsun Zamande. I'm a startup co-founder of a company called Tech. So basically, my question goes to Ketu mostly. What are like some of the common challenges and difficulties like startups usually face in like your experience, especially around freemium business models? And I also wanted to like kind of ask like, because I know like in terms of like, you know, normal accounting practices that you need to have, okay, the unit cost set and stuff, but like in terms of also like user pricing models, what are the like usual challenges that are like usually like set? Because usually in our senses, it's usually like, okay, set it to your competitors and then you fill in the rest, especially in like more of the tech and like, you know, tech space. So I don't know if you could answer that.
Yeah, I think the difficulty with like moving from a freemium model to like a paid model is like if it kind of brings the validation on if that pain point is significant enough for people to part money, right? And I think that is like the biggest like challenge. Like we'll have a couple of startups who'll be like, hey, we've been offering this for free for like 10 months or 6 months, and we're going to activate our subscription. We need VC funding, but it's like the pushback is you first need to prove that whoever your customer base is believes this is a significant enough problem that they're willing to pay.
Yeah.
I think when it comes to pricing, I think you've touched on it. There is looking at what your competitors are offering. There is working from what does it actually cost you to bring this to market and then adding your own margin. But honestly, I think after working with so many different businesses over the years, your customer and experimenting with your customer is the best bet, right? So being able to offer up a price, especially with your early customers, so how close are you to them to start saying like, hey, this is the package that we're thinking of putting together. This is what the pricing that we might come to market with. Does it make sense for you, right? And then you'll get that initial pushback to be like, hey, no, because of that competitor, I'm paying something less. And or, yeah, actually, it's quite a fair price. So I think it's a lot more experimentation based, like once you know what your baseline is, and then working with your very early loyal customers who'd be able to give you that feedback. Which I think for me, that's the way you build your business, right? Like you find your first loyal customers, you're consistently getting insights from them. They inform product evolution, they inform pricing, they inform sort of like what else should be on your roadmap for you to continue to maximize sort of that revenue potential as well. So I think freemium to paid, validation of pain point, and then essentially how you arrive at the right price is doing your internal costing, putting a margin, but then stress testing it with early customers.
Yeah, I'm Lianza, and I work also with SME finance, and I just wanted to talk about the farming one, that it is possible to get financing. It's just that the reason it's difficult is mainly because farming is one of those things where weather can mean that there's no income that year. And then there's no one who's going to finance something like that, where you come and tell us, oh no, it didn't rain enough, or something like that. Because anyone who's giving you money wants a return on investment. But if you know how to mitigate that risk, communicate that, and understand that different banks, different financial institutes assess this risk differently. So it's not one pitch to say, okay, I've got this covered, I've got this covered. Ideally, you would have maybe start to say, look, what are your pain points? What would you want me to address before I come? Then, if you have a consultant or someone who can help you with your pitch and say, look, they're really worried that waste in this industry, we've got ESCOM now, you have produce, what if it's sitting at your place at a time of waste? And then you're saying, ooh, I had high wastage this year. We all understand finance. You have to pay back the money. And no one wants to hear long stories. So that's something that you'd have to literally address beforehand. Someone might not have that problem when you're coming to pitch to them. So addressing the risk specifically that the funders look at. But to know that, I would say you need to know someone, because no one's going to tell you how they assess their internal risk. If you're looking at data-driven, whatever your model, you're not going to share it outside. How we look at certain financing, because there are guys who'd say, look, I'll take it indoors. I'll put greenhouse tunnels. I'll be operating 12 months a year, so I'll give you an income 12 months a year, not down points, not up points, things like that. But if you can have...
Wait, I think you guys will take the
yes,
conversation
we will.
offline.
We will. Yes.
So,
No,
yeah, but thank you. Yes.
And then just one more thing that I think the gentleman mentioned about being prepared is that sometimes when you go for financing, how you articulate your business idea is very, very important, because you might lose it because just people don't understand what you're saying. They can't connect the dots. There's a lot of graphs and charts, but it just doesn't make sense. It should be easy to read and understand. Yeah.
Thank you so much for that comment. We had,
Hi everyone, my name is Gundo. I am an agro processor and particularly specializing in tomatoes. There's certain things that I want to actually point out before actually asking my question. First things first, thank you for the lovely session, ladies. One issue is, in terms of financing, when it comes to agro processors, there is none. I'm telling you because I've been there, I am there, and there is none whatsoever. And the reason why I say that confidently is because there's a chicken and egg problem, right? before you find yourself in a position where you get that contract, because Kitu, I think that's one thing you mentioned, getting that first client. You need to be in a position where you invest, of course, in the machinery, the production lines. You need to get your facility to a point where it's accredited in terms of food safety. And the retailers and as well as many of the companies that, of course, will buy from you, your customers, have to be in a position where they're satisfied with those stages. And it's very expensive. Very expensive to find, for instance, an FSSC 2000 certification. Very expensive to actually find a certification body to actually accredit you, to go through that whole process. It's very expensive to actually get your facility to that point. And at that point, you don't actually have a customer, because the actual person that you want to be your client, who's, for instance, your Coke, they want you to have those things in terms of the certification. So what starts? What goes first? As a black man in this business, trust me when I say, it's not an easy one. It's, like I said, a chicken and egg problem. Where do I start? Do I start by the certification? Okay, for that to actually, okay, I need to have the money. For me to have the money, I need the client. For me to get the client, I need to be in a position where I have the certification. So I'm screwed. And another thing that I actually want to just point out is that funding options, especially as a farmer, my brother, I am with you. I am with you in that regard. As an agro processor, it's even worse, because like I'm saying, to invest in a production line, for you to even be considered by those corporates, for you to actually supply for them, where do you get the money? Who's gonna believe in you to be in a point where they're gonna pop 40, 50 million rands for you to actually get a plant, irrespective of whether or not you're good at what you do? And trust, I'm very good at what I do. Nevertheless, where do I get that?
I think, so Coke is your ultimate client. But because of their requirement, they can't be your first client. You've just said you're very good at what you do. How do you know? What are you currently doing that you know that you are good at what you do? In being good at what you do, because you can't have Coke at a client, you have to look at alternative customers. Who else can you sell your tomato puree? Who else can you sell whatever you do to the tomatoes? Who else can you sell that to? So that by the time you are going to Coke, even Coke has an ESD program. Now, guys, I love ESD programs because it's money. It's money for entrepreneurs that you would ordinarily not get. Even the Coke, you want to sell these tomatoes to Coke. You can go to Coke and say, Coke, I've used from my first rand, because I love numbers, because numbers tell the story from your first rand, right? I've used from my first rand A, B, C, and D. And I'm very good because this is what I've done in the past 5 years. I'm at a point where I'm stuck because I cannot afford the license. Even as SIFA at that point, I myself can walk you into Don Mashele's office to say, this guy he's been very, very good, like you said, for 5 years. All he needs now is the certification, because agro-processing has a lot of money in the country, because everyone is trying to get into the manufacturing. So even SIFA funds SMMEs between 50,000 Rand and 5 million. So if you need production facilities within that mandate, you can walk into them and say, this has been my history. But it all goes back to history, right? How do you prove you're very, very good? This is what I've done for 5 years. I now need machinery, I need the licenses. And then they can help you there. And where you fall short, they'll probably help you with whatever, the business support where you're falling short, and then give you the money. Coke itself, they'll do that for you. If you need more than the 5 million, SIFA themselves will take you to NEF. Because NEF funds from 5 million without a cap on their funding, before they even take you to DTI. If you are that good, they will take you to DTI, and DTI will fund you for a full factory. So the money is there. We just need to know where to access and find it, right? So I think in your instance, Coke cannot be your first customer because of the requirements. You have to find alternative customers where you are proving that you are very good, until a point where you can then go to Coke and say, I've done this. Now I need you guys to come to the party for me. And this is what I need from you. Can you help me? Can you not help me?
Thank you very much for that. Just one last point. I understand in terms of what you're actually talking about, in terms of course, not trying to just shoot for the sky. But like I said, there's certain things, for instance, that require processing at a specific scale and level where, of course, economies of scale have to actually kick in. And unfortunately, you just cannot find yourself in a position where you start off with, for instance, 5 million rands if you're not being engaged in that specific business. And the unfortunate thing is that we are closed out of that because, like I said, chicken and egg problem. Where do you start? You can't find yourself actually achieving economies of scale supplying to the small guys. And trust me, I'm doing that. You know what I'm saying? But nevertheless, for me to actually find myself to even engage with your codes, to even engage with the smaller guys as well, you need to have, you have to find yourself in a position where you actually make that substantial investment. Like I'm saying, chicken and egg.
What are you selling? What are you currently doing? Because I want to know, where does your assessment of very, very good come from?
Like I said, currently right now we're processing different kinds of things, but primarily focusing on tomato paste. So we are doing, so we are processing for smaller companies that, of course, want market access. For instance, as a brand, I don't want to take up much of your guys' time, but I think we'll actually just
tell us who it is so that we can help you to say, okay, you are processing for this company and you obviously have a market.
Yeah.
And within that market, you are able to prove that this is the product that I have. And my thing is, if you already have a product and a customer, and the customers are buying and it's good quality, the only thing that you don't have right now is the certification.
No, not just the certification.
And
the
you want to
machinery.
grow,
Yeah.
right?
Yeah.
But you have to take it in phases, right? Because you already have that smaller nyana market, for lack of a better word, you have the customer, you have the product. You can then move on to, what's his name, to even SIFA.
Yeah.
SIFA will give you funding for 5,000 rand. You also need to know what is important for you to grow now. If SIFA can give you a medium machine, then you move from the smaller nyana to the medium. And within the medium, you get your certification. And from that, then you move to Coke. Unfortunately, this is one of those instances, you can't take a leap to the first floor. You have to take the steps. So if you're at a small scale, you move to SIFA. SIFA will move you into a medium scale. And then from the medium scale, then you move to your corporate, your big corporates. Because big corporates will not always be your first client, especially if there is technical compliance required. Because technical compliance is very, very difficult for SMMEs because it's expensive. Even the engineers and the people that need to do ISOs will tell you. It's very expensive. So you can't move straight into that unless you have the funds to do it. So you have to take the steps.
No, thank you very much. I'll definitely take you up on the offer of you walking me into the office.
I will definitely
Nice
walk
one.
you in.
My name is Kuselo.
Yes.
I am a sommelier by trade, and I'm in the middle of a pivot. And I started an incubation in one of the entrepreneurial companies that support, and my sponsor was ComAir, and we know what happened there. And in that, somebody asked, but how is your business scalable? And as a SOM, it's difficult to understand how it becomes scalable. And then I had a mental pivot to say, actually, an app makes it scalable, because then I'm in everyone's hand and you are communicating with a SOM. But then I realized that it's a completely different industry. I am now not going from a wine-focused person. I am now going into a tech-driven business that is very data-driven and requires cloud services and everything that is required in that industry. And then it became, where do I start? And then I realized to meet my clients, both you as the consumer who consumes wine and the wine estates, I need an MVP. To get to an MVP costs 400,000. And now you sit and go, okay, wait, how now do you
Wait,
go?
sorry, just a clarification question. The 400,000 MVP, is that like a full-blown app?
Yes.
Okay.
So, and for the app itself to be fully functional, it needs so many aspects, which would basically be you decipher the consumer and you decipher the sommelier, and suddenly you have this database. And my first thing was, hey, what are the chances that this app can crash? Because of so much information that gets processed. And in it, I met some people who develop apps, and I was like, okay, what does it cost to get at this? And the first thing they went for was the Microsoft, I think it's Azure, and that profile and how much it costs to sit on that. And suddenly you start to realize there's a lot of barrier to entry cost-wise if you want to operate at the right level. And going forward, I started to realize, how is it that you, without looking for venture capitalism, but you're looking for assistance to go from idea, specifically for apps, where you can get to before the app is ready to say, is this now something that I can get to somebody before spending astronomical amounts? To say, can I get to play around with this? Which direction does one go to say, okay, this is the idea, where can I practically put it in place without costing an arm and a leg?
Yeah. Firstly, an app is not an MVP. If you're going to be paying 400,000, that is already a fully launched product. The second piece, I'm interested to unpack when you say that tech in this instance is enabling, like it's allowing scale. I think tech in this instance would be an enabler, but nothing that generates, unless if I'm wrong, and maybe it's worth sort of a afterwards conversation, but it wouldn't help you generate revenue, to just enable distribution. Am I getting it right?
Well, it's both sides. It's a marketplace, it's an advisory platform, but it's also a membership platform, because different wine estates have got their own membership clubs. But it's how do you connect the consumer to the individual wine estates and allow the wine estates to control their revenue and tap into that revenue. Because a lot of people will say, do you know I bought the wine directly from the farm? And that's the pride point for that consumer. And how do you then enable that consumer to be able to buy directly from the farm as consistently as possible?
Okay. My advice would be, because I'm already seeing 3 different products that you're trying to launch. My advice would be going back to understand what is the biggest pain point, and then that becomes your starting point. And then there's definitely a minimum viable platform that you can have, even if it's like a landing page. So for example, with the marketplace, you can quickly spin up a landing page that has a couple of products, and you're trying to then connect to consumers, right? You don't need an app for that. You can spin it up in a week, and you're starting to generate those early insights to see, is it then worth going and hiring somebody to actually build this out for me? Same thing with the membership piece. Like, I don't think you need a fully fledged app. They're like off-the-shelf membership platforms that create communities, 400 Rand per month, and then you just kind of simulate that and customize it to the wine estates, test a couple of features, test, is this really solving a pain point? What is the monetization potential in this? And then essentially deciding what to do going forward. So I think my first advice is, like, out of those 3, like, which is the core one? And then the second one, they definitely are always off-the-shelf products and or landing pages that you could do to just see, is tech playing quite a prevalent role in enabling you to kind of generate revenue? And then that's what you should base your decision on, in terms of, okay, cool, now that I've done this for quite some time and they're asking for much more bespoke features, I have more clarity what those features are, I have clarity around how to monetize those features, then that's when the economics of actually bringing somebody to build it out would make sense.
And then this brings us to the last question for the evening. Remember that there's a prize up for grabs, which Fred will announce. So the last question is right behind you, Mo.
Hello, my name is Yuan. I'm an accounting student, but I also work for Founders, 2Fs, which is just like a group marketing agency anyways. So my question is a bit weird. I want to ask, where does VC funding in South Africa, in the South African landscape, where does it originate from in terms of nationality? And how does that influence return expectations from investors? Because if I'm sitting in the US with like a 3% interest rate, how differently am I looking at South African ventures than what I'm a South African with a 10% interest rate? And then with a caveat, how does the fact that we don't have the capacity to do a Facebook-sized business in South Africa, how does that affect like the kind of venture funding or the levels we get?
Yeah. Very, very great question. In terms of where, so I actually wrote a piece on where, so maybe let me take a step back. venture capitalists are funded by people called limited partners, and there's different categories of those limited partners, right? In South Africa specifically, a lot of them are coming from corporates. So it's not necessarily the US. The US mostly backs Nigerian-based startups because Nigeria has the big population. It's had a lot of the hype. You're already seeing second-time, third-time founders. So yeah, we're not necessarily US-driven. So it's mostly your South African corporates. I think, please repeat your second question, sorry.
Oh, I was asking, in terms of like the difference in nationality for the funders, how does that influence return expectations for South African businesses?
Yeah, and then the second one was on what that scale could look like,
Yeah.
right? So in terms of South African VC, most of it is from corporates. It's not necessarily from individuals, unless if you do have specific startups, mostly in Cape Town, that do raise from European funders. I do think the VC landscape has matured a little bit for people to kind of understand that Africa in general is still a nascent ecosystem, so the return expectations aren't the same as what you'll get in the US, aren't what you get in Europe, but then the potential is still quite massive, right? So I think that's why people keep doubling down on the space. That's why us as Founders Factory Africa are consistently doubling down on the space, despite the infrastructure challenges, despite sort of the economic factors that kind of, decrease consumer purchasing power, etc. So it does have an influence, but I do think a lot of investors that I engage with in the US and the Europe, they kind of understand that it's a much more of a long-term, patient capital type game versus what you'd expect in some of the other markets. The second piece, which is a little bit contentious, but that is part of the challenges with South African-based startups, because the infrastructure is so different to what you'd find in Nigeria and Kenya that when you're trying to launch something from South Africa to Nigeria, it's almost impossible, right? Because you're dealing with so many different dynamics in terms of consumer behavior, infrastructure, etc. So when we look at South African investments, it must be something where there's a sizable enough market share that we can make a return here. And not necessarily somebody saying that, hey, like I'm going to start in South Africa, I'm going to go to Kenya, because Kenya, for example, is like mobile money driven. We are banking systems driven, right? So I think there's a certain pragmatism that founders need to have about, is this a strong enough pain point that really works well in the South African consumer context? Could I find scale by maybe going to corporates, and can I prove out there's a value proposition within corporates? But then whatever the big market size of that, like how much can I realistically attain? And then what is the translating sort of return for the investor? And we assess that on our side as well, right? So I don't know if that answers your question or if...
Thank you, Hope. Because we're out of time, you can grab Hope and Kitu afterwards if you've got questions. I think we've got a good farming community going, so we can create a caucus around that. On that note, we're wrapping up. I'm going to call Fred to announce the winner of the smart question. But I'd like to thank Kitu and Hope for joining us on stage today and allowing us to really, pick their brains on certain matters. And there's two things I'd like to ask of you. Please make sure that after this event, there are QR codes outside. Scan, join our platform, check out our recipes. You can actually watch Kitu and Hope's recipes, which are absolutely brilliant. And there's many other entrepreneurs that could motivate you and help you with some of the dilemmas you're facing. Secondly, check out our report. The Heavy Chef Foundation's got a report on the future of entrepreneurs in South Africa, if you're keen to know what that looks like. And become a member of our community, and I hope to see you at the next event.